Paper, we've got FAC1503. It's MayJune 2017. This is the second paper. It's a 2-hour paper. It's 100 marks. Remember, you need 50% to pass. So always apply good exam technique. What do you do when you get the paper? You immediately go here, and you're looking for what? This. Analysis of financial statements. Why? Because it's easy marks, so long as you remember your equations. You need to study them going to the exam. As soon as you get the paper, check what you've been given, write down the formulas so that you pass. Okay, in terms of passing this particular question. 20 marks, 24 minutes. Let's look at question 4. There's question 4. Look at the required. The required asks you to calculate these ratios. Trade receivables collection period. You would have studied the equations. Here's the equation for the trade receivables collection period. Write this down in your on your actual paper. I would write that down on the question paper even. Okay, or if you want, you can write it in the book. It's up to you. Okay, but question 4 looks good. Easy marks, I can get 20% as long as I've studied my ratios. Okay, ratios are everything when looking at this particular section. Right, number 2, trade payable settlement period. That's B. There's the formula. You write that down in your equation, in your test. You need the equation. Skip lines. Then I write down B. Okay, skip some more lines. C. C was looking at the current ratio. Okay, current ratio is easy. Current assets over liabilities. Don't even have to study that one. You should know that one off by heart. Write down that equation. Then I've got D. D is return on assets ratio. Okay, so where's my return on assets? There's my return on assets. Write that down on your answer sheet. E. E was solvency ratio. That's total assets over total liabilities. Also, easy one to remember. Write that down. F. What else did they ask for? Inventory holding period. Inventory holding period. There's it. G. Profit margin. Profit margin. Write down that formula. Okay, and now you're ready to do the question. Okay, so it's 24 minutes. You're not even going to take that long doing this because it's just a formula that you need. So if you've studied your formulas, you should be fine. And here they tested a lot of those ratios. 20 marks. Okay, so first ratio. Remember, all formulas and calculations must be shown. If they must be shown, you're probably going to get a mark for remembering the formula. All answers must be rounded off to 2 decimal places after the comma. That's important as well. Okay, so let's go to the information. What did they give you? Okay, they gave you a financial position statement, and they gave you some additional information. That was it. Okay, go back. Trade receivables collection period. All right, I'm going to need this. Average trade receivables. Average trade receivables, we know, is start plus end divided by 2.
Just a quick question.
Yes.
The answer becomes the same at the end if you start to the end.
Doesn't matter, yeah. You can go end plus start divided by 2. Doesn't matter which one you add. Okay, but you need to add the right amounts. Okay, average trade receivables. So my trade receivables are here, 150, and I'm looking for beginning of the year. Purchases, sales, opening balances of trade receivables control. There we go. There's it. Opening balance. 105 plus 150. 105 plus 150 divided by 2 equals 127500. Then I need my credit sales. Equals. Credit sales, total sales amount to 1 million. Credit sales represent 55% of the total. So 55% of the total sales. 55% of 1 million equals 1, 2, 3, 4, 5, 6 zeros times 55% gives me 550,000. Now I can work it out. So the answer to this, if I substitute in, I think maybe just, let me just put it here. Okay, equals, I'm going to have 127,500 over 550,000 times 365 equals, gives me 84,61 days. Okay, they said round off to 2 decimals, so you'd have 84,61 days as the final answer. Next, trade payables settlement period. They want the average trade payables. So again, I'm going to have start and end divide by 2. My payables are here at the bottom. There's my trade payables, 305, and my trade payables at the beginning of the year was 300. So 300,000 plus 305, 330. 330 plus 305. 330 plus 305. Divide by 2 gives me 317. Then I need to divide that by my credit purchases. So credit purchases equal. Here they said total purchases amounted to that, 550,880. Credit purchases amount to 50% of the total. So half of it is our credit purchases. 50% of the total purchases. 50% of, what is it? 550,880. 550,880 equals 550,880 times 50% gives me that answer. Right, now I just need to substitute that into there. So 317,500 divide by 275,440 times 365 gives you an answer. 420 days. They said round off 420,74 days. And there's your answer for the next one, for B. C, current assets over current liabilities. That's easy. Current ratio equals total assets over total liabilities. What are my total assets? I need to find that. There's my total assets. There's my total liabilities. Total assets 161613,000 divide by total liabilities 896,000 equals 1.80022. So round off 1,80, 2 decimal place. Final answer. Okay, makes sense? Return on assets, profit before interest and tax over total assets. ROA equals, I need my profit before interest and tax. I know what my total assets are, there's it there. I just need the profit before interest and tax. Where do I have that? There's it, profit for the year. Okay, then you've got the tax, and then you've got the interest. So we need to do a calculation for this. So how do you work this out? Well, you need to remember EBIT, which is earnings before interest and tax. Then you less the interest, then you get EBT, which is earnings earnings before tax, then you less the tax, then you have net profit for the year, Okay, or after tax.
You don't add the profit for the year, right?
What do you mean add?
There was a formula where we didn't add the profit for the year. We just took the two amount, which was the less interest and before tax.
It depends what they give you. Okay, so here they gave you what? Profit for the year, which is this, 390000. Right, they gave you normal tax of minus 109200. Okay, there's the tax, which you less. And they also gave you the interest, which was 88650. Right, so if I'm looking at going backwards, okay, I'm starting at the bottom, I need to go back. So the amounts are going to get bigger, because every time you subtract, you subtract, you subtract. So if I'm going backwards, you're going to add, you're going to add, you're going to add. Okay, so to get back to the EBT, right, I'm going to take the 390 and I'm going to add this, so I get the 4992. Okay, then I've got less interest, so I need a bigger amount. I need a bigger amount here because I subtract the interest, and that's what I'm left over with. Okay, so same thing again. This, there's the EBIT. Right, so now I've got the earnings before interest and tax. So ROA is going to be 587850 divided by total assets 1613000 times 100 equals a percentage. Percent, round off, 36,44%. There's the answer for D. Next, solvency ratio, total assets, total liabilities, easy. Hold on a sec. I'm thinking here, oh, no wonder, made a mistake here. Yeah. Okay, total assets and total liabilities, this was actually solvency. Be careful, made a mistake with the equation. This was solvency. Okay, solvency was total assets over total liabilities. Okay, we need to fix this. Current ratio is current assets over current liabilities. So I need to change these figures. Current assets, there's my current assets, 533 over current liabilities 305. Yeah, be careful, made a mistake there. Gives you that answer. So it's 75, rounded to 2 decimals. Okay, so the current ratio is current assets over current liabilities. Current assets, that one, over current liabilities, that one. Okay, then we had solvency. Solvency is total assets over total liabilities. Total assets over total liabilities, that's correct. Okay. Right, inventory holding period. Average inventory, we need to work that out again. Average inventory, bracket start plus n divided by 2. Okay, so the start, I'm going to need opening and closing stock. Okay, there's my closing stock. 285, and I need opening stock. Cost of sales, point number 3 on the 1st of July. Oh, inventory, there's it, correct. There you go, you've got everything. So it's 285 plus 270. Gives me that. Cost of sales was given in the question, so I don't actually need that. There's cost of sales. Okay, so to get the inventory holding period, average inventory was 277500 divided by cost of sales, which was 508380 times 365 gives you an answer. Rounded off, 199,24 days. There's the answer to question number F. Okay, that was E. That was C. Okay, great. Happy with that one. Last one, profit margin. Profit before tax. So we had that earlier. I'm just going to copy my working from before. We discussed it earlier. I'm just going to put that down here as well. Okay, the figure that I want in this scenario is that one. Profit before tax, or earnings before tax. Profit or earnings is the same word. Okay, right. So profit margin equals EBT, so 499,200 divided by sales. Sales. Where's sales? Here's sales. So million, right? Times 100 equals. Percent. Round up to 2 decimal places, that will be round up to decimal places. Okay. 20 marks, 20%. Things are looking pretty good after having done the easy question. Always do the easy question first. Something like ratios are easy to do as long as you've studied your formulas. Right, and that's why I've started with question number 4. Okay, which question do you want me to do next?
We can do a counting equation.
Counting equation, fine. So let's do 3 now. Question 3 is a counting equation. Okay, there's the question. 20 marks, 24 minutes. The following transactions for December pertain to Z, a dealer in car batteries, not registered for VAT. That helps a lot. And periodic, meaning purchases. Opening stock, closing stock. Right, what must your solution look like? Analyze the above transactions in tabular format as follows. So we need to create that. Date, debit, credit, assets equal equity plus liabilities. Right, so you need to create your answer in the exam. Okay, that's what you're going to be creating for yourself. They want you to analyze the above transactions. They want you to use a plus or a minus for increase or decrease. They want you to show all calculations. Let's go back to the transactions. There's the first one. The owner, J, took one of the office computers valued at 47 cost price for his personal use. As soon as I see the word personal use, I'm thinking drawings. Drawings are always debited, so you would have debit the drawings. And what did he take? He took office computers. What business are we in? We're selling car batteries. We're not selling computers. So office computers would be seen as equipment. Bracket, you can even write down office computers if you want to as well. Asset, decrease. Okay, drawings is drawings, drawings is debited. Drawings will decrease owner's equity, so you'll have minus 47 there. Assets decrease minus 47 there. And that's that one complete. You get that one right. Nice. Number 6. Received a check for 1.5 from R, a debtor, in full settlement of his account of 1.7. If you receive a check, bank is going to go up. Bank is an asset. Assets increase on the debit side. Bank asset increase. And debtors asset decrease. You also need to show the discount because this is a settlement discount. Discount allowed, bracket expense, increase. So there's your two transactions. You need to show the working. Well, obviously this is easy working. It's 200, there's a discount, right? Okay, so bank asset increase plus 1.5. Debtors decrease, so minus 1.5. You've got discount allowed expense increase, so plus, well, expenses increase will reduce owner's equity, minus 200, and asset decrease minus 200. There's your working for that one.
I missed out the last part.
You left out the discount. Okay, settlement discounts must be recorded. Trade discounts aren't recorded. Okay, so you got half the marks for that one. Okay. Number 11. Purchased inventory on credit from G and received a trade discount. Trade discount means you take it off the cost, you leave it off. The selling price of the goods prior to the discount was 2,300. So I do need to show this. If I'm buying on credit, the word on credit means creditors. Creditors, brackets, write in the name. Liability increase. What did I buy? I purchased inventory. If I'm using periodic, we call that purchases. Expense increase. That's your working. What am I going to record? I'm going to show the calculation. The calculation here is 2,300 minus brackets 2,300 times 10% discount equals 2070. Purchases expense increase. If expenses go up, owner's equity comes down. Liabilities go up, plus. Plus. Okay, there you go. Liability increase, expense increase. There's your accounting equation effect. 17. Received a check from J for 1.9. His debt was written off as irrecoverable during August. Right, what month am I looking at? December. So do you agree this is a receipt from a debtor that actually was written off previously? So this is bad debts recovered. Bad debts recovered is an income. Bad debts recovered. Or you can call this credit losses recovered. Or credit losses recovered. Either would be correct. This would be an income that's increasing. I received a check. Bank is going to be positively affected. And I received 1,900 plus 1,900. Bank goes up, affects the asset positively. Equity will go up because income is increasing. Got that? Okay. 21. The account of H, a debtor, is 3 months in arrears. Interest at 12% per annum must be charged on the arrear account of 4,400. Okay, so calculation in terms of interest. Principal times rates times time. So times the 12% times how many months? 3 months. 3 over 12 equals, what does that give me? 4400 times 0.12 times 3 over 12. Did you get 132? Nice. The account of H, a debtor, is being charged interest. So the debtor's account will go up. Debtors is an asset, so debtors, H, asset increase. Why are you increasing the asset? Because you're charging interest. Income increase. Income increases on the credit side. Equity will increase if income increases, so you'll have plus 132 there. and assets increase plus 132 there. 27, last one. Issued a credit note of 160 to T for a calculation error made on the invoice issued to him on 19 December, which resulted in an overcharge of the amount due. So if you're issuing a credit note, you're reducing the debtors, right? Because credits reduce the debtors. So debtors will be decreasing. I need to identify the debtor though. What's the debtor here? Trollop. I didn't identify the debtors for number 6. Number 6 was who? Rickett. Okay, I just need to put that name there. Okay, so debtors, Rickett, debtors, Trollop, debtors, whoever. Okay, you need to identify them. Right, what am I doing? I'm giving them a credit note because it was an overcharge. So this would be a sales return. Sales returns, expense, increase. How much was it? 160, correct. Decrease 160, decrease 160, and that's the end of that question. Okay, so did you pass that question?
I'm at 80%.
80%, that's brilliant. That's what you want.
Yeah. It's just the name that I got wrong. But
Yeah, but everything else is perfect. All of this was good,
yeah.
except one.
Except the discount there that I didn't do.
Yes. Okay, 2. Right, but that's still a very good effort. Nice, well done. Okay, so question 3 is complete. Now we go back and we look at the timeline. We've done those 2. Which question do you now want to do?
Let's do the cash journals.
Yes, I would do something also quite easy to do. Cash journals, bank account, and bank reconciliation statements. 20 marks. Let's have a look at it. Here's the question. Question 1 says, in terms of required, complete the following in the accounting records of C: receipts and payments, bank account general ledger, and bank recon. Okay, so they've asked you for everything in the bank recon. This is what is possible in terms of complete bank recon type question. Question 1, bank recon. With the bank recon, you need to draw up your answer sheet. So my answer sheet is going to have 3 things. The first thing, A, cash, receipts, journal. They say bank columns only. Okay, fine. So day, details, bank. That's it.
So it's like easy. When they give you bank only.
Yeah, bank only, then it's just those columns. That's it. Right, so that's your cash receipts journal. That's your cash payments journal. Right, remember receipts is internal. This is your books. Payments are external. Internal. What am I saying? Okay, receipts and payments are both internal. The bank reconciliation statement is external. Bank reconciliation statement, you'll have a debit and you'll have a credit. Bank reconciliation statement always starts with the balance as per the bank statement. Can you change the bank statement balance? No, you can't. So that's what you're trying to reconcile. You're trying to reconcile the balance for the bank statement. They also asked you for, that was C, the general ledger. Okay, so I'm going to need a T account here for bank. And now I'm ready to do the question. That was B. A was the journals, B was the general ledger, C was the bank recon. Now I'm ready to do the question. Okay, so that's what you draw up in your actual answer sheets. Right, now we go to the question and now we read all the information. Question 1. On comparing C's cash journals for April and the bank recon at 31st March. The bank statement of the entity for 30th of April, the following was established. Great. Totals of the cash columns in the journals at that date were as follows. So this goes to my journals. Total. My receipts is starting with 13,204. My payments is starting with 12,050. What day would you put there? Last day of the month, 30th of April. Everything will be 30 April because it's at the end of the month. You do the bank recon monthly. Next, items appearing on the bank statement but not in the cash journals. So if it's not in our journals, do we adjust or reconcile?
Yeah, you see, I just have to reconcile. Can I please mine and check? It's not
Okay, we adjust. Okay, adjust means you record it in your journals. Reconcile means you process it in the bank recon. A debtor B paid that directly into the bank account. Debtor B Dube. Amounts 1350. There's the first adjustment. Debit order monthly security services in favor of Safeco. Is a payment. It's a debit order. 950.
I was so confused with this one because of when they said in favor of Safeco.
It's in favor of the business. So you are debiting your account in favor of someone else. You're paying. A check for 370 issued to N, a debtor, was dishonored. Where do dishonored checks always go? Correct. Check ID. How much? 370. Service fee and internet banking. 189. Correct. Bank charges. Or you can call it service fees or whatever. Whatever they refer to it as. Service fees, etc. Internet banking. Interest on bank overdraft. Goes here as well. You pay it. The interest on the overdraft was 64. Great. Now you've completed point number 2. Point number 3. Items appearing in the cash journals, not in the bank statement. See, these are reconciling items. Reconciling because the bank isn't showing it, you're showing it. So are your books correct? Yes. The bank needs to fix this. A deposit dated 30th of April 2017. That would have been outstanding as a deposit.
We didn't put the balance.
Outstanding deposit. Yeah, we'll get the balance just now. We don't have the balance. Okay, there was no balance here. Well, I'm just going down the question. Okay, I'm going down 1, 2, 3, 4. Okay, so outstanding deposit amount 1220. Check 61 dated 7 April for furnished suppliers for furniture was that's outstanding, so it's an outstanding check. Outstanding check will eventually come off, and it'll come off at an amount of 1240. Next, items appearing on the bank reconciliation statement of the previous month, that means last month, not on the bank statement this month. Check number 218 dated 5 October 2016. That's a long time ago. Do you agree? Okay, that's a stale check. Stale checks always go to the cash receipts. Stale check brackets, the amount here was 110. Yeah, this was from Tabani. Stale check 1100. Okay, then you had check number 589 dated 19 March 2017. It's outstanding last month. Is it still outstanding this month? Yes. So another outstanding check. So this check that I had here initially, I should have labeled it. Let's label these checks. Outstanding check here, this was number 611, and this check is number 589. Check number 589 is outstanding, 770. Got that? Happy? Okay, no, you can't put that in the CPJ. Outstanding. Number 5 goes in the bank recon. It's an outstanding check, yes. Number 5, check number 606 for that, dated that amount, issued to a creditor. L was returned by the bank due to an error on the check. A new check will be issued during May. Right, so what happened here? We issued a check to a supplier. Did the check go through? No, it didn't. A new check will only be issued in May. So I need to reverse out the payment. So if I reverse out a payment, I'm going to process a receipt. Okay, so error on check 6. No, not check 6. Oh, they don't give you the check number here. So Kimber. Okay, error on check Kimber. How much? 904. 904. Oh, hold on. A check for 904 received from... sorry, jumping the gun. Okay, looking at the wrong one. It's 864. Wrong figure. 864. Great, thanks. Okay. Right, now we've got the Kimber one. A check for 904 received from AK, a debtor, during April was recorded as 940 in the cash receipts journal. The error must be corrected. Okay, so who made the mistake?
Who made the mistake? We did.
Exactly, the business. So adjust to reconcile.
We
Adjust.
because
Okay, because your books are incorrect. Right, so we adjust our books. This was a check. Was the payment too high or too low? Was the payment too high or too low?
the payment was we overpaid.
The payment was less than what we recorded. Do you agree? Right, the check was 904, but you recorded 940. So you actually recorded a receipt that was too much. So how do you correct a receipt? By processing a payment. I need to change the name here. This was for Lunga. Don't start with this, because if you find it difficult, don't do it at the beginning. Do the easiest questions first, then you come back to the more difficult.
I'm actually doing much good on this.
Okay, well, as long as you find this easier, then you can start with it. But always start with the easy questions first. Okay. Right, how much was the amount? It's the difference. So 36.
Also, you record the difference, not the full amount.
Yes. Okay, because you're fixing what you processed. Right, the bank account had an unfavorable balance of that in the general ledger. So there's general ledger. Unfavorable means this is a liability. So you're going to have balance here brought down, and the balance would have been 1054.
If I write total,
No, must be balance. Yes, balance brought down. 30th of March. Okay. Bank statement had a favorable balance. So, bank statement has a favorable balance. You want a favorable balance on the bank, so then there'll be a credit. 2595. Okay, remember it's the opposite. Okay, you want to see a credit on your bank statement. Do you agree? Great. Now we've completed the question. All we need to do now is balance.
okay, so you always need to make space for balance.
Always.
Because I've got it at the bottom there.
Where? Bottom here.
Yeah.
Okay, that's a different balance. That's balance as per the general ledger accounts. Okay, that's a different balance. That would be hopefully the balance that we would have on this side as well. Okay, one step at a time. Let's finish the receipts. Sum up all of your receipts. Okay, sum up all of your payments. Right, so this is going to increase the bank. Do you agree? Receipts increase the bank. What month were we looking at? April.
So it's always month end.
Yes. Because journals are posted at month end. Total receipts, CRJ, amounts, there's it. Okay, then total payments, correct, decreases the bank, you're right, CPJ. Okay, there's the total there. Now we need to balance this account. Which side's bigger? The debit side, right? Debit side's bigger than the right. Do you agree? Yeah, 16,000 is bigger than 14. So I want 16 on both sides. I'm then going to carry down a balance. Balance carry down equals this minus that gives me 1805. Right, so that's the balance that you've got in your books. You're trying to confirm this balance with that balance over there. That's what you're trying to do. Right, if the amounts work out the same, then you've done it correctly. Okay, 1805. Right, so let's check here. Which side's bigger? The credit side is bigger. Do you agree? Sum up that side. Okay, that side's bigger. I want the same total on both sides. So this minus that gives me 1805. Okay, and that's what you want to see. Now you know you got full marks for the question. Okay. Easy, hey?
Yes.
Good.
I don't know why I was actually confused because I just need to take my balances and put them in my journal.
That's all, just the balances, yes. Okay, so let's save that. That's another question complete. Alright, so now you've more than passed the question.
Yes, I've got 90%.
You've got 60%.
60%.
Okay, 20 plus 20 plus 20 is 60%. Okay. Right, what do you want to do next?
Let's do our trust account.
Correct. Okay, let's do the trust accounts. Number 5. Trust accounts marks 28 times 34. There's question 5. It's a long question with their different sections. Okay, they gave you some stuff there. Okay, they've given you different parts. Alright, so we need part A and then part B is the trust creditors. Okay, it's very similar to the other past paper actually. It looks familiar. Let's start with part A, question 5. Okay, this is the tough question in this paper. Question 5. What did question 5 want? Part A said, open the following ledger accounts in the general ledger of M as at that, post the subsidiary journals. Fine. Trust bank account. Let's draw that up.
Just take out something similar to this in the exam.
Okay, trust bank accounts.
Business bank account.
Business bank. Client control. Trust creditors. Trust creditors accounts. And yes, fees. Perfect. So now you've got your answer. They said all accounts must be properly balanced. That's important. Commence the general ledger accounts with the opening balances. That's important. Prepare the general ledger accounts in the format illustrated below. That's also fine. Okay, so we need to look at part A. Where does the question start? There's the start of the question. Right, so what must I do initially?
We need to take the balances and put them in the correct.
Okay, get the opening balances. That's the most important bits, and that's easy marks. Okay, you're never going to get that wrong unless you can't read the information correctly. Okay, Business Bank 9,300. So where's Business Bank? There's Business Bank. It's an asset. So what date was this? Trial balance at 31st of October, and we're presenting things for the month ended 30th of November, right? Yes. Okay, so we're looking at 1 month's transactions. Right, so the business bank account 9,300 is what they started with. What date? It would have been the starting balance, so the amount that you've got before adjustments. Yes, so 31st October. Balance. Great, there's the business bank accounts. Trust bank account, 10,900. Same story. Trust bank accounts, 10,900. Make sense? Great. Okay, so tick that, tick that. Okay, then you've got trust creditors control, which comprise of two, Bongi and Pillay. This needs to be added. So 5 and 5 is 10, 1 and 8 is 9. So 10,900. Trust creditors. Where's my trust creditors? Trust creditors, there's my trust creditors. So the balance is going to be 10,900. Got that? Great. Next, client control, same thing, add all of this up. 6,600. Client control, 6,600.
So we don't say balance breakdown.
You do?
Okay.
You do.
That's what I actually wrote.
Yeah, you're right, balance brought down for all of these.
Yes.
With the date, obviously. Yes. Okay. Alright, so we've got that, we've got that. Capital do we need? No. Equipment do we need? No. Law library, no. Sheriff, no. Station on hand, no. Perfect. So now you've got everything. Business bank, trust bank, that's it. Okay, so the following totals appeared in the subsidiary journals of M on 30th of November. Okay, so remember, subsidiary journals record specific transactions. Okay, so what transaction would go in the trust cash receipts journal?
Cash.
Think about it. When do you get a trust creditor?
Trust creditor. I don't know.
When the customer owes? No. When the customer owes the business, or when the business owes the customer? Think about it.
Trust creditor.
The client owes the business.
But if it's a trust creditor, that means
If they're a trust creditor, it means that they're owing, or that we're owing them because they have deposited funds in our accounts. Okay, does it make sense? Okay, so the trust bank we had, capital we don't need, equipment we don't need, law library we don't need, sheriff we don't need, station on hand we don't need. Okay. Trust cash receipts. This is receiving money from your clients, right? So the trust creditors is going to go up. And what other account is going to be affected? Correct, the bank. Right, so where's my trust creditors? This is for my journal, so I'm looking at the T account. Where is it? Here's it. Trust creditors will go up. Trust creditors is seen as a liability because you would owe them, yes. Okay, so bank CPJ. CPJ, because, hold on. Oh, cash receipts. Yes. Sorry, it's you're right. R, not J. Okay. So the trust creditors means we are receiving more money from them. Okay, we're going to owe them more. Does that make sense? Okay, the amount 8,000. Come on. 8,000. Okay, there's your cash receipts. Trust cash payments journal. What is that going to do to the business?
Before we proceed, don't you have to record that amount in the bank
Did they ask you for bank?
for your trust bank?
Fees? Oh, yes, they did ask you for bank. Correct. Okay, so if they did ask you for bank, this is going to go to the trust bank account. Correct. Good. Right, so there's the debit. There's the credit. Trust bank accounts. This came from where though? Cash receipts journal, that's fine, perfect. Okay, happy with that? Great. Right, now we can look at the CPJ. Trust creditors, what's happening here? They're paying, right? So what happens to their bank? It decreases because of payments. Okay, what did they buy here? Do they say? No, they don't. It just gives us trust cash payments journal. So that means that these creditors are paying using their money for rendering certain services in terms of legal practice. Okay, so the trust bank account will come down. By 7,200, yes. Okay, I will just put an asterisk here. You could try use something in the question to describe it.
If you say creditors as per CPJ,
If you said creditors as per CPJ, no, you can't say creditors. I'm trying to think now, what is it called? This is called a payment of, let's think now, what is this? Okay, so you're getting money from your client. Your client is using their money to pay for certain expenses. Okay, so that would have gone through the customer's accounts. Okay, the trust creditors. There we go. Okay, so trust creditors, and it'll be CPJ. 7,200. In your, that's the trust bank account, right? So the bank account is going down. Then go to your trust creditors, put 7,200 here. Trust creditors, there's it. Okay. $7,200, right? I want to highlight these amounts so you know what they are. Okay, this goes with that. Where is it? This. Thanks. CPJ. This goes with this. Makes sense? Okay. Alright, so now I've looked at that, Business cash payments journal, that's easy. Okay, so the business cash payments, if you're paying, the business's bank account will decrease. Total receipts, total payments, CPJ. The total payments, 6,200, 100%, that goes there. Perfect. Okay, this is in the business bank account. Right, what else do we have? Fees journal. Where's our fees journal? That's trust creditors. There's our fees journal. Okay, this is looking at the client control account. So, client control means, let's think about it again. Oh, it means the client is paying us for services that we've done. Okay, we've earned the fee. Does that make sense? Yeah. Okay. So the fees journal, it's an income. Fees will go up or down. The fees would go up. Okay, so the fees journal will go up because you are generating income. And that would have been part of your client's control account. Okay, so 4,900 here, client control accounts. No, not client control account, because then you're debiting their account. If you're debiting their account, you're increasing the debtors. Oh, that does make sense. That is correct. Yes, because the client control account is an asset. It's like debtors. Okay. The fees account is income. Okay, so it's like sales and debtors. Right, so there's the one amount. And then in my control account, which is there, you're going to have the 4,900. That came from where? The fees account.
I put it correctly in the client's control, but in the fees account, I posted it on the debit.
Oh yeah, you can't post two debits.
Yeah, I understand.
Okay, that's why I'm just highlighting those two colors. Okay. Right, now we need to look at the dish information.
Which got me off track.
Yeah, it can be quite tricky because this is obviously the difficult part of the question. Okay. Assume that the information in additional information 1 was before the bank recon of the trust bank account was done. Okay, so before the bank recon. The only differences between the trust bank statement and the trust bank account in the accounting records of Marapo were the following. An EFT transfer on 29 November 2016. Is that more than 6 months ago? Where are we in terms of time? 30th of November 2016. This was literally the day before the end. Okay. Right, so an EFT for that on behalf of G to the City Council for property taxes. Okay, so who's paying this? The client or the business? Let's think about this. It's the client's money and we're paying for the council for property taxes. Yeah, so the client would have to pay this. So if it's an EFT, who's paying it? The client. Okay. So if the client is paying it, it's going to come out of the trust. You put in the trust bank account? Yes, because this is an EFT. The client is going to have to pay. Okay, and what are they paying for? City Council property taxes. Okay, an EFT transfer on behalf of G. Okay, so then that would have been, you'd have to credit that specific account, City Council property taxes. Okay, the trust bank account is going to go down 1,500. Okay, we don't have an account for City Council and property taxes, so let's think. What other account could you use to show that? Client control. Client control means they're either owing you or not. That would be like debtors. Trust creditors. Would it be trust creditors? Let's think about this. Trust creditors. You're paying for city you're paying for city property tax, city council property taxes. Trust creditors means you're owing them. Are you taking money from them? Yes, you are, but you take it from the trust account. That means they owe you less. That would be right. Okay. Okay, have a look at this. Trust bank account will be taken off the trust creditors. Okay, because remember, what is the trust creditors for? It's for the client's expenses. Right, so you're using the client's money. So this would be the one transaction. Okay, and the other transaction would be in the trust creditors there. Okay, so trust bank CPJ, you're making a payment, EFT transfer. How much was it? 1,500. Okay, next. The reversal by the bank of 4,000 paid into the trust bank account of G due to insufficient funds in the private bank account of Mr. G. Okay, so this is a dishonored check, right? So if it's a dishonored check, you're going to reinstate the debtors, and because you're reversing it out. So you're going to reverse out. If I reverse out, because this was a reversal of the bank of 4,000 paid into the trust bank account. Okay, so if it's paid into the trust bank account, the money didn't go into the bank account. Okay, if it didn't go into the bank account needs to be credited. Okay, so that would have been additional 0.2. Okay, so how much was it? 4,000. 4,000, it's the reversal of the bank because this was insufficient funds in the private account of Mr. G. Okay, that's correct. So then the trust account would hold on, the trust account wouldn't go, the trust bank account in terms of money, yeah, money will come out of the accounts, okay, and then you'll owe the customer less. Okay, so trust creditors again, 4,000. Where's my trust creditors? Here's it. Okay, because then you're owing them less, not owing them more. The liability decreases. Okay, so trust bank account. $4,000. Great. These two transactions must still be accounted for, which we did. Is that it? Yep, that's it. Great. Okay, so now we need to balance these accounts off. Which side's bigger here? 12,000? 18,000. That side's much bigger. This minus these amounts gives you the balance carry down. Balance brought down. Make sense? Great. Business bank account, we had the balance, we had the payments. Did they not give us any receipts here? Let's just check. Business receipts. Business receipts. No, we only had business payments. Okay, so no business receipts. Well, business receipts would be the fees journal. Okay. All right, so for the business's bank accounts, easy one to balance. $3,100 is still sitting in the client's bank accounts. Got that? Okay, that's the business bank account. Oh, sorry, I said client, business bank account. Okay, client control, that's easy, you just add and subtract. Well, add and subtract nothing. There's nothing to add and subtract. Okay, so equals the sum, those two figures. Oh, come on, sum of those two figures. 11,500. Balance carried down, balance brought down. You don't have to show these. I'm just showing it just in case. Okay, and then the trust creditors account, you would expect that to have a credit balance. So did any of these have a credit balance? No. Okay, so I'm to do the working here. Okay, which side's bigger? This side should be bigger. 18,800 equals. Okay, so balance brought down, carry down, brought down. Balance brought down equals this minus the sum of those amounts gives me that answer. Okay, got that. Right, the fees journal, there was nothing to balance here. Okay, so we would just leave it as is, and that's it. Part A complete. Happy? Kind of. Yeah, this was a difficult question in this particular exam. Okay. Right, now we've got one more question to do. You've done 4 of the 5 questions. You still have question 2 to look at, which is multiple choice. It's a lot yet. 12 marks. Was I still busy with question 5? Did we not finish it? Oh, yes, there was a part B. Sorry, forgot about the part B. Okay, there's part B. Did I label this part A? No. Okay, part A complete. Part B we need to look at. What does the question say? Well, there's the question. Calculate for each trust creditor the amount that should be transferred from the trust bank account to the business bank account on 30 November, after all the information given in the question has been taken into account. Okay, that's not too bad. So each trust creditor. So trust creditors equal. Okay, so let's see who we have. Let's go back and see. Trust creditors. We've got 2, Bongi and Pillay. That's it. Okay, so Bongi and Pillay. Right, what did they start with? Balance. Bongi started with 5.1. Pillay started with 5.8. Okay, great. Right, so they want to know, let's just read the question again. Calculate for each trust creditor the amount that should be transferred from the trust bank account to the business bank account. Okay, so in other words, trust bank account to business, meaning their money becomes our money. So you've earned it, it's a fee. Okay. Alright, so client control account. Their client control account means that they owe us. Okay, that's debtors, like debtors. Okay, so minus the client control. Okay, so how much do they owe us? If they owe us, their trust bank account will decrease because they're going to pay us. Do you agree? Okay, so their client control would be, I think you also have to look at Matthews as well.
Why are we taking Matthews?
Because Matthews is a customer client. So if we were a client, Matthews doesn't have a balance, but he's still got a client control account. So meaning he's still like a debtor to the business.
Because in the previous one we didn't look at the third individually, we only took the 2.
Do we only look at 2?
We only took the 2 in the creditor's control in the previous.
Okay, well, I'm going to just show Matthews here and just see if it does make a difference, if there is anything for Matthews. Okay, for Bongi we had minus 2,500 and minus 2,100. Okay. Right, what else do we have here? Okay, there's it. Trust cash receipts journal. The receipts journal, we've got Bongi, which is 3,000, which is trust receipts, so Bongi would have plus 3,000. Okay, this is add trust CRJ. Okay, so plus 3 for her. 0 here, 0 there. Okay. Then you've got okay, well, I would also look at the G here. Host you would put here as well. Why? Because there's it there. There's the name of the creditor. Okay, I'm just adding more detail because I'm looking at all of them. Okay. Then trust CPJ. So then less trust CPJ. Okay, that's what they paid. So Bongi paid and Pele paid. Right, that's it. Business bank account, no, and then you've got the fees journal. Right, so the client control. So Bongi, so then less the fees. Okay, so Bongi has to pay us that fee, and Pele has to pay us that fee. Right, was there anything else here? This was EFT for who? For G. Okay, so if you wanted to, you could look at G. Then you would have shown this was an EFT on behalf of them. So then you would have less. This would have been a trust CPJ. Asterisk payments by G. Okay, so that would have been minus 1,500. And then reversal by the bank paid to the trust bank account due to insufficient funds in the private account of G. Okay, so that was a dishonored check. So then you would add back. Add the check RD. Okay, meaning they still owe you an extra 4,000. Right, reversal by the bank of 4,000 paid into the trust bank account. Okay, so trust bank account reversal, meaning it didn't go through, so minus reversal less. Okay, and that's it. So if we had to look at balances, yeah, I don't think you need to look at these two, okay, because they don't have a balance. That's the problem. Okay, the thing is they don't have a balance. Matthews only had a client control account. So if you wanted to, you could say less his client control, which would have been, how much was his client control? 2,000. Okay, but you see, he didn't have anything in his accounts.
So we actually not posting anything to the bank.
Well, let's check. Okay, so these are the balances at the end. Okay, so what does that mean? Well, remember, these were balances on their trust creditors. Trust creditors is a not a liability. Yeah, it is a liability. A liability meaning these clients, we owe these clients because it's their money. Okay, so the question asked you to calculate for each trust creditor the amount that should be transferred from the trust bank account. Okay, so from their bank account to our bank accounts. So that means if I look at this, Bongi is going to transfer 3,000. Matthews, 2,000. And G, 500. Okay, these amounts would be what they would have to transfer. And that makes sense because think about it. A client control account means they still owe us. Okay, it's like a debtor. Okay, so that means that these people owe us. And then Pele, we actually owe them something. Alright, it's the opposite. Okay, so calculate for each trust creditor the amount that we transferred, all the amounts given in the question taken into account. Fine, so that's it. Okay, then I would just show that as the final answer. Okay, is that alright? Okay, a bit difficult, but tricky, because as I said, they've thought about the different accounts. Okay, now we can go look at the multiple choice, the last question. Question 2, MCQ, 12 marks. Did you do this ahead of time? Did you do this ahead of time? Not the multiple choice. Why didn't you do the multiple choice? Okay, so the multiple choice should be easy. Okay, this is question 2. Okay, question 2, multiple choice. Right, so question 1. Okay. You decide which answer is correct. Which subsidiary journals will be affected when a transfer of funds from the trust creditor's account to an account in the client's ledger is recorded? So you're transferring from the client's money from the trust creditors to the account in the client's ledger. Okay, so their ledger account. What would you use? You would definitely use business cash payments. No. You're transferring funds from the trust creditors account. So trust CPJ. Where's trust CPJ? It's G. Okay, so trust CPJ is definitely in. Okay. Transferring funds from the trust creditors account to the account in the client's ledger. Client's ledger. So the client's ledger means it's their money going to the ledger, which is a business cash receipt or the fees journal. Okay, so that would have been the business cash receipt. You're receiving something from the client. And would you transfer? Yes, you would transfer. Okay, so I would go with D, E, G here. Okay, option 4. Okay, choose an option here. Which one of the following statements concerning the management of human resources by law practitioners is correct? We might need the. Okay, well, you try choose one, and then we'll check it with the textbook. Correct. Okay. Human resources doesn't only include the attorneys employed by the practice, because remember, it's also recruitment. A fair workable compensation scheme should adequately reward everyone in the firm for the work done and should provide incentives for the future. That's possible because it's a compensation scheme. Okay, law practitioners should always include a traveling allowance in the remuneration package of an employer. Not always, as that always generally isn't the right answer. Okay, it should not always include. It can though, but not always. The conditions for retirement should be set, but need not always be available to employees. That doesn't make sense. Okay, law practitioners must determine the best layout of the office space to satisfy the employees. That's got nothing to do with HR. Okay, so 2. Which of the following statements describes what Section 17 of the Attorneys Act of 1979 requires of a legal practitioner regarding trust money? Okay, we know trust money needs to be separate. Okay, so a legal practitioner is obliged to keep a separate trust bank account? Definitely. Money received from a third party in respect of a property transaction must be deposited into the business bank account until the transaction is finalized. Money received from a third party, it wouldn't be the business's account. Okay, the separate trust account must be with a banking institution in the Republic, obviously. So C, definitely. And D, any money held or received on behalf of any person must be deposited in a separate trust bank account? Definitely. Okay, so A, C, D. 4. Next one. Which one of the following statements concerning the term trust money is correct? Trust money is payments made by the law practice from the business bank account? No. It's not from the business's bank account. The purpose of a trust in a law practice is to keep clients' trust money for investment to the benefit of the law practice. No, it wouldn't be for the benefit of the law practice. Trust money is money entrusted to a legal practice to be held in trust and dealt with according to the client's instructions. Yes, that sounds good. Trust money is money deposited by clients in the business's bank account? No. Trust money is money entrusted to the legal practice to be held in the business bank account? No. Okay, so the only option is 3. Which of the following options should be included in the financial planning of the law practice? Okay, financial planning. Borrowing, capital, recruiting. Recruiting out. Expenses, evaluation, compensation, retirement, income, training. This is looking at the financial planning of the law practice. Okay, this is very specific. Let's refer to the textbook, because they're going to ask you a question that comes out of the textbook. Financial planning. Okay, understanding financial planning. Financial planning includes the following. So capital's in, expenses are in, income is in. Okay, so capital, yes. Income, yes. Expenses, yes. Compensation, borrowing, that's it. Compensation and borrowing. Okay, the rest are out. Okay, so A, B, D, F, H. A, B, D, F, H, 4. Question 6. According to the Law Society, interest earned on the trust money which was invested in terms of section 78 2A of section 78 of the Attorneys Act must be paid over to the Law Society after certain expenses have been deducted from it. Which of the following expenses can be recovered in this manner? Okay, this is very specific to the Act. We need to check that. This was, what's the focus here? Interests.
I think you need to go because you're right.
We're right at the beginning, yeah. There we go. Provision to make a possible dissolution. Okay, no.
I think maybe look at the Act.
Okay, that comes back to this.
Yeah, I think if we look at the Act, we should be able to determine this.
I don't have the Act.
Yeah, but in the textbook it should give us.
With the accounting textbook. The accounting textbook doesn't cover any law stuff. It's all accounting. Okay, remember, the law stuff comes out of your study guide. Okay, so it must be here. It would have been under the trust. I'm sure I've read it here. Let me just go back to this. It's the trust accounting stuff. So that was Learning Unit 4, page 223. Okay, there's it. Okay, so it's in this chapter. Okay. We're looking at the interest part there. Bank charges and interest. There's it. Okay, so that's page 229. Two two nine is before this. Transfer journal, transfer requirements, transfers, other journals, 229. There's 229. Okay, the bank charges and interest. All right. Let's see. There we go. Okay, so unless otherwise stipulated by a client, say in the case to offer to purchase where interest accrues to the purchaser, the interest is paid over to the law society of the province concerned. Such interest is applied to cover bank charges on the trust bank account, the insurance of the trust creditors again. Okay, see, there's it there. Okay, let's just get rid of all of this. All right, so such interest applied. There, that bit. Okay, so such interest is applied to cover bank charges on the trust bank account. Bank charges on the trust bank account. Bank charges on the trust bank account. The insurance of trust creditors against fraudulent use of their money. The insurance of trust creditors. Insurance of trust creditors. fraudulent use against their money. There's it. And audit fees relating to the trust accounts. Audit fees relating to the trust accounts. There's it. Okay, BCH. BCH, number 1. Okay. Right, so very specific theory that literally comes word for word out of the textbook. Right, so if you haven't read those last few chapters, just read those last few chapters, just so you familiarize yourself with the theory, because you can see they tested something very, very specific. Okay, so again, it just depends on what they examine. Right, was that the end? Yeah, that's the end. Okay, perfect. So that was the whole exam paper. We've done the 5 questions, 100 marks, 2 hours long.